Hello, folks. Hello. My name is Benjamin Z. Meller, and in this video, I'm going to answer the question, how can someone maybe as a new investor that is just starting out, how exactly do you diversify, and what does that really entail? Well, good question. First, please don't forget to like and subscribe for more content just like this video. So, diversification is a fundamental aspect of building a resilient investment portfolio. You know, we hear about it a lot, but it is so important. And it's one of the things that most new investors, this is what hurts them, is they think, well, I want to get rich. Maybe I should go buy some crypto, and they stick everything in crypto, and they're thinking that they're going to be the one that gets the big win, and then instead the coin goes in the opposite direction and they crash and burn. I just hate it when I see them crashing and burning in that crypto. It involves diversification. It involves allocating your assets among various financial instruments, industries, and other categories to reduce the impact of market volatility. So here are some key factors that are so important for a new investor to know about diversification. You have to look at asset allocation. This is the primary way to diversify. You want to include a mix of stocks. Now, as soon as I say that, everybody, they want to go jump on the stock market and buy stocks there. And that's fine. You can sure buy some stocks there, but you are cheating yourself out of a lot of potential in some of the non-listed companies, privately held companies that are out there. And if you're interested, just send me an email, ben@benjaminzmeller.com. That's ben@benjaminzmeller.com. So you want to get a mix of stocks, bonds, and possibly some other assets like real estate or commodities. The exact mix, it needs to align with your risk tolerance, investment goals, and your time horizon. You also need to think about geographical diversification. You don't want to just focus on your home country's market. That is small-minded thinking. That is small-minded thinking when you have all of your portfolio in one country. What if something doesn't go perfectly in your country? If all of your wealth is there, how smart was that? Maybe you should have expanded out. Looking into international markets, they can offer growth opportunities and help you reduce risk associated with one economy. You need to look at sector diversification. You have to be smart, folks. You've got to invest across different industries and sectors. This way, a downturn in one sector won't have as severe an impact on your portfolio. You also need to look at investment style diversification. You should consider a mix of stocks, value stocks, privately held companies that are rapidly growing, and perhaps even dividend-paying stocks can make sense. Each style reacts differently under various economic conditions. You need to also look at the currency. Some people, particularly I feel for those investors in the UK where they have all of their currency, the British pound, and they put the bulk in that currency, so they can do great in their investment. And if that currency keeps losing value against the dollar, that's nice that they did well, but how did they do when you calculate the real rate of return? Maybe they should look at that. You want to look at rebalancing your portfolio. You know, there was an American economist, Markowitz, and he won the 1991 Nobel Prize for economics for his work on modern portfolio theory. And basically, when it came to his own portfolio, though, he used something far simpler. Once a year, he would adjust his portfolio. He'd put half his money in stocks and half his money in bonds, and then he would adjust. So if the stocks went higher, he would sell stocks and then he would buy bonds. Or if the stocks went down, he would sell bonds and buy stocks, and he would just adjust it once a year. Risk management is so important. And to really get good at risk management, you're going to need some training. And the great thing is I offer some completely free training. You can join my investor networking group, the Benjamin Z. Meller Investor Networking Group, where you can meet hundreds of investors from Europe and the Americas. We have hundreds now. We've got investors from all over, and you can meet. You can get the list of everyone. You can get in touch with them. You can talk about deals. Oh, you're going to love it. It is fantastic. If you'd like to get a free invitation, just send me an email, ben@benjaminzmiller.com. That's ben@benjaminzmiller.com. And the final thing I would say is, as a beginner, you have to think long term. Some people, they make an investment, and if that investment doesn't right away result in everything they want to, they get discouraged and they say, oh, I want to give up. You got to think long term. You got to go in and not let go. You got to say, I'm not going to give up. I'm going to keep thinking long term. So important. A lot of times the companies that in the beginning are growing, it may take them years before they start generating a profit. Just look at Amazon. Look at how long it was until Amazon generated a profit. It lost money for years, but those investors, they stayed with Amazon. I bet they're feeling pretty smart now. If you'd like more information, just email me, ben@benjaminzmiller.com. That's ben@benjaminzmiller.com. I hope that helps, and I wish you good luck with your investing.